Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on investing in the federal government of Nigeria's US dollar bond. Last week, the Debt Management Office, DMO, on behalf of the federal government, announced the offering of a $500 million domestic US dollar bond with a maturity of 5 years and a fixed coupon of 9.75% per annum. The investors are lending money in dollars to the federal government for 5 years with a promise to receive 9.75% in interest every year. The offer closes on the 30th of August 2024. The investment is targeted towards idle funds in domiciliary accounts, Nigerian savings abroad, Nigerian diaspora, and qualified institutional investors. Here are the features of the bond. 1. Issued in US dollars. 2. Backed by the full faith and credit of the federal government of Nigeria. 3. Coupons will be paid twice a year. 4. The unit price is $1,000 per unit. 5. Minimum subscription is 10 units, implying a minimum of $10,000 and a multiple of $1,000 thereafter. 6. Interest rate is 9.75% per annum. For instance, if you invested $10,000, you will be paid $975 yearly, which is $485.50 every 6 months. 7. Invested funds will be paid at maturity. 8. No tax deduction and qualifies for tax exemption. 9. The bond can be used as collateral. 10. Payment can only be made through the banking system and electronic transfers into the designated accounts. 11. Dollar cash deposits are not accepted except cash deposits that have been made into domiciliary accounts above 30 days before the date of this offer. 12. The bond will be listed on the FMDQ and Nigerian Exchange to allow bondholders to buy or sell the bond. Please note that this bond may not be actively traded. Why you should subscribe. 1. Attractive return on investment. The promised interest rate of 9.75% is competitive relative to other investments with similar risk profiles. 2. You can invest idle funds in your domiciliary bank account, earning zero return. 3. Minimum tradable threshold for a standard Eurobond is $200,000. Hence, with a minimum of $10,000, you tend to earn a similar return on your investment. 4. The return on investment is guaranteed relative to mutual funds with target returns. 5. The interest on the investment will be paid directly into your domiciliary bank account and principal upon maturity. 6. Invest funds you are willing to set aside for 5 years, as this bond may not be easily tradable. 7. Low risk. This has low investment risk as it is backed by the full faith of the federal government of Nigeria. 8. Diversification. The investment provides you the opportunity to hedge against the devaluation of the naira rather than have all your investments in naira. 9. Tax savings. The bond qualifies for tax exemptions. 10. Consistent dollar cash flow as interest will be paid every 6 months. Here is how to subscribe. 1. You can obtain the form from the issuing houses, stockbroking firms, and banks, or download from the DMO website www.dmo.gov.ng. 2. Complete the subscription form. 3. Make the applicable payment for the subscription via wire transfer to any of the designated accounts of the receiving banks. Details are contained in the pricing supplement. 4. Submit the completed form alongside the evidence of payment, either physically or electronically. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.